Hi everyone, Market Video Analytics, Liteforex Broker, we're back. I'm Cuzin, every Tuesday and Thursday giving you our top level market trading, analytics and training, educational training. That's every Thursday. Today we're going to have a follow-up session. Basically I'm going to follow up on one of my predictions, one of my biggest predictions I would say, that I've made on the 9th of October. That's pretty much about a month ago. You can actually go ahead and search that session if you haven't seen it already. The title is Crude Oil, Major Downside Reversal is Imminent. That was the title, and basically what I did was I was showing the crude oil right on its very edge of its upside trend as it began to turn around, and I suggested that we're going to see a huge downside reversal, and I actually took massive action on it. I have established a bearish position, a big bearish position, and I actually laid out the game plan, so to speak, for that bearish position. Now it's been a month since then. Let's go ahead and take a look what happened, and also I would like to discuss about what's about to happen as I see it. Let's go ahead and take a look. Alright guys, so we're looking at the weekly chart right now. This is the bigger picture, right? And you know, there are mainly two reasons I wanted to touch base on the crude oil today, besides the fact that obviously, I wanted to brag about this really nice prediction that I've made about a month ago. But on a more of a serious note, the first reason was just to follow up and share with you my game plan, right, with regards to what's about to happen here, how do I see things, and what's my next step. The second reason is really I got tons of questions from you guys asking me how low can this go, right? Where is going to be the bottom of this downside move? Where is going to be the next upside reversal? So I took it very seriously. I took your questions and I wanted to address them today, right? Now, bear in mind, I still have a tiny position in place, right? Believe it or not, I'm dragging here about $15 of position, about a month and a few days, basically. Now, it all started, let me dial back a little bit. It all started roughly when I shared my bearish conviction here on the 9th of October, where price was evidently failing to break above a very strong, very important key level, the top key level of this matrix setup, and I'm talking about that black system here, 7508. Now, the reason I'm talking about this level is because a few months ago, price had began to trade sideways. After a few legs in place, basically after 3 legs, I started to identify that trading range, and my intentions were to start and take advantage of this trading range. But when the 4th leg ended right here, and basically completely failed to break above 7508, just leaving that spike here, that's exactly the type of the reaction I was waiting for, right? Because price just proved to me that it was unable to continue on the upside, but rather begin to turn around. Now, obviously, this trading range suggested that price should go back to the lower section again, right? So this is where we took massive action. I actually entered at 74.75. That's my entry level, and I shared my whole game plan with you guys here, right, about a month ago. Now I was aiming at 65.61. That's usually the level I'm always aiming for, because that's the biggest key level. Sometimes I choose to try and catch the second part. Now the second part is what I call the second degree price target. The second degree price target is always the previous major low. Take a look, which is 63.4. 63.40. That's the price tag for the previous low. And sometimes I choose to aim for that part, which is basically the part between the mid-low key level, in this case 65.61, and the previous low. It could be, the previous low is very much, it's very depending on the technical situation. It could be a wide part, it could be a narrow. But, it's basically a sketchy part. It's more of a risky part. And the reason I take it is only if the recent high also took the previous highs, right? That's a very important element. If it doesn't happen, if the recent high didn't take the previous highs before, I would not aim for, that second part here, right? The second degree price target. Now, in some cases, some rare cases, I would actually try to chase the third part of the move, which is the most sketchiest part and the riskiest part of them all. So I rarely actually take it, but sometimes I do, and here I chose to do it as well. Now, this third part that I'm talking about, I also refer to it as the third degree price target. It is basically outside of the setup. It's beyond the setup, right? It's beyond the bottom key level here, which means that I believe that the trading range is going to break out. In this case, going to break down and reverse the whole trend. Now, the reason that I believe that has to come from the bigger picture. The bigger picture has to point out that it is more likely that price will break out of that setup in this case on the way down, and possibly reversing the whole trend, or just basically generating a really significant downside correction for the major trend. So this is exactly what happened here, and I want to show you exactly what led me to believe that we're going to have a breakdown below that bottom key level right here. By the way, the level is 61.13, and the reason why I'm still having a tiny bearish position in place. So I'm going to take you to the even bigger picture. I'm still going to stay on the weekly chart, but I'm just going to I'm just going to crunch the resolution a little bit so we can fit the whole trend. Now, this is why I said I'm going to show you why I think the bigger picture was pointing out for a continuation of this downside move, for a breakdown. So about a week ago or 2 weeks ago, I've made a session here on the educational trading session about the Elliott wave method of analysis. If you don't know the basic principles, go ahead and check that out. But for those of you who are familiar a little bit with the Elliott wave, so I think we're looking at a classic Elliott wave cycle. Now let me show you what I mean. Ever since the beginning of 2016, the major trend shifted from a downside trend to an upside trend. And I think we had the first wave going up, second wave going down, third wave going up again. And right now we are witnessing the fourth corrective wave, which usually tends to reach the very tip of the first wave, right? Either scratching it or even deepening well into it before turning around for the fifth, right, impulsive move, for the fifth last impulsive move, progressive move, if you will. In this case, an upside move. Now, what I did was, so like I said, because I saw that fourth corrective wave, and because I know that usually, in most cases, they reach the very tip of the first wave, I knew that a breakdown below the very bottom key level here is necessary, right? I also counted the legs, and for a for a breakdown, in this case a downside reversal, price breaking out of that symmetric setup, it takes the fifth leg to perform it. So because it was the fifth leg, I was strongly I was tending to think that price will actually break out of that setup and continue on the way down. So now for the big question, how low can it go, right? For this part, I would like to perform an advanced Fibonacci projection analysis. And what I always like to do is I like to measure the last opposite move and perform a projection analysis, right? So what I did was I took the last move, take a look, from the very bottom to the very top, the last opposite move, right? And I applied two very important key levels, the 1.236 and the 1.618, these two red lines, right? This is the 1.618 and this is the 1.236. Then I always look at one particular correction level. The 38.2 I find to be the second most important after the 76.4. In this case, the 76.4 is just not relevant, right? Because we're talking about the big trend. I mean, it could be relevant, but right now, what's more relevant is the closer one, which is the 38.2, a very prominent correction level. I always look for that level, right? Now it looks like we're heading straight to that level, straight there. You know what? Let's mark that level with a horizontal line, which also states the price target, right? The price tag, sorry. So you can see I've placed this green horizontal dotted line, and I'm going to take out the actual measurement. So the level is 57.35. Now that is very, very close to the 1.618, right? The 1.618 of the previous opposite move, a projection level. Let's mark that level as well. So this level falls roughly around, well, actually exactly on 55.94. Let's call it 56, right? So they're very close to one another. It's not a classic cluster, right? Because they're still pretty much apart. But it's interesting. I think this is an important range rather than a price target. It's actually a range rather than a key level. And of course, I'm talking about the range between these two levels. I think that this range could spell the end of the downside move, which is in effect a downside correction on the major trend, right? On the big cycle. We're thinking that this is the fourth corrective wave. And I think that it could reach that, that range, scratch the tip of the first wave and begin the process of turning around and starting to build up the fifth wave. Now, I should say this. I still hold a bearish position. Once it reaches the first key level, 57.35, that's it. I'm out of there. But I'm not going to flip over immediately. No, not at all. Actually, I'm going to set some conditions, some rough conditions that if not met, I will not dive in with a bullish position. I will not try to catch a falling knife. I never do that. So let me lay out these conditions, and I'm probably going to follow up on that in the future. So let's take a look. I'm going to enlarge the picture here. And it's quite interesting to see that we actually had a cluster here, right? Take a look at this red line, which is very, very close to the bottom key level of the black system, right? The 1.236, very so close, I would call it a cluster. But here's the interesting part. Price had overcome that level, right? That cluster. Not only the bottom key level, also the 1.236, the first projection level, right? Forming a cluster here. Price had made it. It broke these two levels, right? And it closed the weekly bar below with a that's a confirmation. Weekly close below that level. That's a confirmation. Now we can actually see the reconfirmation we got just this week when price had started on the upside, just to knock on that door from below and find out that the door is closed, right? It's a strong resistance. it was a support. Now it's a strong resistance, and you can see how price began to push away from that level. That's a very, very significant indication that this level is dead, right? It's a pivotal point. It got crossed. This is a point of no return. Price will not look back from this point on. However, back to the big question. How low can it go? So you can actually start and guess what I'm trying to say here, right? I'm trying to suggest that price will reach that range, and from this point it will begin to look for an upside correction. However, here are the conditions that only if met I will establish a bullish position. So take a look. As far as I'm concerned, price needs to reach the 57.35, but also needs to reach the 1.618 at 56, right? But not close below that key level, the 55.94 here, the last one, 56. Price can spike it, right? But it cannot close the weekly bar below that level. If it does, there you go. The conviction is thrown out the window, right? I'm not going to establish a bullish position unless price will show that it reacts to that level, unable to close below, spike it a little bit, begin to turn around. But this is just one part of the condition. The second part of the condition, well, should I say the second condition, is that price comes back and closes back above the higher key level, 57.35. So it needs to touch base on the 1.618, right? And then cross back above the 38.2. Don't forget, the 57.35 here is the 38.2% of the whole upside trend, right? So basically, these two conditions I require to meet in order to establish a bullish position, right? Fair enough? I don't want to catch a falling knife. I want to see price react to these two very strong levels and then begin to turn around, visibly turning around, closing above the higher key level. That's going to be the moment I'm going to strike. And guess what? I'm going to take this one pretty far, right? Because, you know, if the next fifth leg is what we're going to have here, then it should surpass the previous major high. But I would also suggest pushing much further than that, right? Now, I don't want to start and you know, analyze the projection here because it's so soon, right? We're not even turning around yet. We're still on the downside. There's no point to begin and analyzing the possible price targets for the upside. But like I said, I will follow up on this one. Hopefully sooner than later, price will reach that range, begin to turn around, and if the conditions I've just laid out will meet, then obviously I'll follow up on this one and we will reanalyze the situation to come up with potential price targets. All right, guys, that's about that for today. That's about that for our video session here on the crude oil. Don't forget to subscribe to our channel, to join us. We're doing 2 sessions a week, and I think it's just fascinating to see everything unfolding here as I share it, you know, in real time. All right, have a great trading day. See you in the next session. Bye bye.